Throughout the years, people have been looking for an easy way to miraculously lose weight. From fad diets to cosmetic surgical procedures, people have tried and tested all of these, but nothing seems to work long term. This all changed in 2017 as this miracle came in the form of Ozempic and in 2021 in the form of Wegovy. These miracles were called GLP-1 drugs and were invented by the company we are talking about today, the pharmaceutical giant from Denmark, Novo Nordisk. As their stock has fallen out of favor in the last few years, I will break down if I still see them as an investment opportunity fit for my Grand Line portfolio. Let's get to it. Novo has been a leader in their category for almost a century as they've created numerous types of drugs that can help people that suffer from weight-related illnesses such as diabetes and obesity. They led in the commercialization of insulin in the 1920s and even created the first insulin pen in 1985. As they continued to lead the industry in this category, they were the first mover in GLP-1 drugs with their brands Ozempic and Wegovy. As word got out of the amazing weight loss possibilities of their drugs, growth skyrocketed as consumers used them for this purpose rather than its real purpose of helping people who have weight-related illnesses. This immense popularity led to unexpected demand, creating a shortage for their branded GLP-1 drugs in 2022. This shortage flooded the market as compound facilities were allowed to produce generic versions of this drug without FDA approval for a number of years. This spooked investors and their stock lost favor, causing its price to peak on June 25, 2024. This fear continues to this day as Novo stock trades near its 52-week lows. But are investors correct that generics are eating their lunch? Quick search into the FDA website shows that this shortage was already mitigated by February 21, 2025. The FDA cited that Novo now has adequate supply to cater to demand in North America. This means that compound facilities cannot create copies of Novo's FDA-approved formulas and gives them 2 to 3 months to stop circulation of their supply. This forces distributors to get GLP-1 drugs from companies with FDA-approved brands such as Novo Nordisk and Eli Lilly. Despite this positive occurrence, Novo's stock price fell and is now down about 70% from its all-time high. This is due to the company reducing guidance and shaking up top management. As usual, changes in guidance spooks Wall Street and creates potential opportunities of investing in amazing companies for value investors. Now, let's dive into their numbers to see if Novo is a potential value investment for my portfolio. As you can see from their 7 years of owner earnings, they have been growing each year and have shown huge growth in 2023 due to their GLP-1 brands. They've hinted that growth in these may slow down as noted in their guidance, but does this mean that their moat is now under pressure? I would say no due to a number of factors. Factor number 1, they are one of the leading producers for obesity and diabetes care as proven from their track record of inventions for the industry. Number 2, they operate above standards as seen by their list of FDA-approved products. I would say that these 2 points prove that they have a deep moat as regulations in healthcare can mean life or death for the patient who need their drugs. And 3, they are the most efficient company when compared to peers. For this third point, here's a relative analysis of their peers who also compete in the obesity and diabetes care sector. I will be using my usual operating metrics accompanied with their earnings yield at the time of making this video. Additionally, I will be using debt to equity ratio to see how healthy the balance sheets are of the companies being compared. As you can see, Novo is operating much more efficiently by posting the best-in-class operating margins and return on tangible assets. They have the second best return on equity as well, but this is only due to Eli Lilly having a huge amount of debt in their books as seen in their debt to equity ratio. This is also paired with them having the best earnings yield at current prices, which makes them the best deal in the obesity and diabetes care market. With these 3 factors, I would say that Novo's moat is intact for the foreseeable future. On the other hand, one thing that may pose challenges is the innate need to innovate in their industry. Even if they are in the lead, they would need to continuously evolve to keep their moat intact. I am pretty confident that they will continuously innovate due to their track record, but the pace will depend on top management. As their top management has been shaken up, this makes the innate risk larger as I am not knowledgeable enough to understand if they are putting the correct people to run the company. This puts their pace of innovation, similar to all other industries such as tech, in the too hard pile for me. After my DCF, I would say that they are not in deep value territory as well, and their surge in price in the prior years is likely due to the unrealistic long term growth prospects that investors had. This means that current prices reflect some margin of safety, but not automatically scream a solid buy for the company in terms of price and quality. With that, I am not ready to pull the trigger and buy the company at these prices as they require innovation to stay ahead of the curve. Similar to my Adobe analysis, I would want a deeper margin of safety to feel comfortable with the potential fluctuations due to the fast paced innovations that could affect the future earnings of the company. For my next steps, I will keep them on my watch list and hope that they could reach lower valuations as I do see them as a very high quality company outside of required innovations. Thank you so much for listening to my analysis. For those who are curious about my portfolio updates and changes, please don't forget to like, comment, and subscribe. I will be doing this for future videos as well. Thank you so much.